You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. And before we begin, I want to remind you that there is a website associated with this particular podcast. It's wealthformula.com. Wealthformula.com is where you can sign up for a number of our resources, including the Investor Club. If you are an accredited investor, if you meet the criteria as one and you want to, start actually potentially participating in some of the things that we talk about on this show, make sure to sign up and go through our onboarding process there. We'd love to have you. Now, in addition to that, and relevant to this show, there is something called Wealth Formula Network, which I think a number of you probably would love to be part of but don't know about. Wealth Formula Network is our private online community, okay? And it is a bi-weekly Zoom video meeting calls. And also, in addition to that, we have a Facebook group to keep in touch in between. Wealth Formula Network actually grew off of the course that we had a couple years back called Your Roadmap to Real Wealth. And that course is good. It's a lot of foundations in it. It's got a lot of, smart people like Kenny McElroy, Tom Wheelwright, and all that. And that initially was the idea, is the course was going to be the focus, and then you had the community. But as it turns out, the course ends up being just sort of a foundation, and then the community is really, really taken off to the point where, the level of conversations is really, really high level. It's taking this stuff to the next level. So if you're interested in that, look at wealthformularoadmap.com. I bring that up in part because our guest today is a conversation with Ian Kurth. Ian's been on before, but he's part of that group. And the idea for this particular podcast basically came from, one of our 90-minute Zoom video conversations that we had that everybody seemed to be really into. Anyway, so I'm going to have that conversation with Ian Kurth right after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is sort of an in-house player. His name is Ian Kurth. He's been on the show before. He's a radiologist located in the state of Wisconsin. Ian is a part of our insider group, Wealth Formula Network. And if you don't know what that is, it's basically our private online community. You can go to wealthformularoadmap.com and figure it out. But the whole thing started with me creating this course, and the course is fine and great. But what ended up happening was, we had this ongoing community afterwards, which includes bi-weekly Zoom video calls and also this Facebook group. And that's really been, I think, a very surprisingly, I'll be honest, completely surprisingly, a very potent place for people who are interested in this stuff to continue to sort of take it to the next level. And Ian's sort of the, one of the all-stars of that group, one of the senior members of that group, should we say. So, Ian, welcome back to the show.
Thanks, Buck. Thanks for the invite. I'm glad to be back.
Well, I'll put you on the spot here right now. I've talked about Wealth Formula Network, but how's your view on this? I mean, obviously it's a little bit of a plug for it, but I mean, who's the right person for this? What are you getting out of it? That kind of thing.
Yeah, no, I think it's important to look for mentorship groups, peer groups, where you can exchange ideas to make sure that you're staying within your own guardrails. Be curious enough to listen to other people's viewpoints, figure out where your blind spots might be in terms of your own portfolio and your own education base. And I think this group, since I've been a part of it, has grown to serve those needs. And I think it's been very impactful in my own education. It's been very impactful in the way that I approach things. And, I applaud you for starting it, for having the initiative to pursue it and to foster it and provide a platform for people to participate. And
no, that's good. I mean, I think what I'm always impressed at is sort of like, we have people who I think have made substantial, came in knowing almost nothing, which is fine. That's what you want. And then But it ends up almost being like a residency, right? Like where everybody's talking about things and the terminology just kind of keeps coming back and forth. And before you know it, you're speaking the language. Well, good. I don't want to, belabor that point, but I just thought it'd be interesting to get your take on it. One of the conversations, and now I would say multiple conversations in that group, have really, focused. I mean, literally, like we'd go for like an hour and a half at a time, and I end up having to leave, and then everybody. I don't know how long you guys go, but these conversations, particularly lately, that people have really, I think, gotten into are questions about Bitcoin and cryptocurrency, which is, I would say it has always been the peripheral part of what we do. We've always kind of seen it as a, asymmetric risk type thing that you participate in. And in one of our last calls, I think you had made a pretty substantial pivot that was pretty thought-provoking. I think for a lot of people, as a fairly conservative investor, a guy who's not out there like, trying to figure out where to throw your money next as shiny objects. But you made a pretty interesting, a challenge, which was, why not put 30 to 40% of your net worth into Bitcoin right now? I think that's what you said.
It was a thought experiment, sort of designed specifically for you, and I think it's relevant. I mean, as you said, we put a lot of time and many conversations about this, and I think it's relevant, in our society these days because it's all over the news, and sometimes it takes a certain number of touch points when you hear about a certain topic to internalize it to the point where you're willing and curious enough to dig a little bit deeper, and that's kind of where that conversation went. From my own perspective, and I certainly don't want to come across as a crypto expert by any means. If I could advocate for anything here today is to encourage people to be curious and to dig a little bit deeper and to educate yourself enough to make a rational decision one way or another. And there's no judgment either way. But to flippantly disregard it, I think isn't serving your own needs. And my experience over this has been, frankly, encouraged by some of your early conversations back in 2017. And it was sort of a trend or a movement that I felt at that point deserved at least some attention. In 2017, 18, 19, as you know, the on-ramps to these type of investments were very challenging. It was to the point where it was obnoxious, in my opinion, and I refused to participate in many of those until I found a way to access it, which was sort of a private equity access point that solved some of those problems. So I've had skin in the game for a long time. And long enough to actually experience a lot of the volatility that is inherent within this currently, and then realized based on certain macro trends, based on certain.
Well, let's back up. Let's back up for a second here, because tell me one conversation we had in our Wealth Formula Network call yesterday. I think we were talking about. Back in 2014 or 15, whatever, somebody looked at the date and said, look, Bitcoin on this day, this many, it was like $500 or something like that. I mean, or $200, who knows? It was something in the $100 thing. And basically you said, I wouldn't have bought then. So something happened, even say 3, maybe 4 years ago in 2016, you wouldn't have cared what the price was. What did you see then that was different from necessarily what you're seeing now?
I think the resilience of Bitcoin over the whatever 10 or 11 years that it's been around is compelling to me. And so if you take that example and track back to when Bitcoin was $100, I know myself, I wouldn't have been curious enough to figure that out. I wouldn't have been compelled enough to put any sort of capital deployment that would move the needle in any way towards that at that point. And I'm not in this space. I'm not a techno geek. I'm not an economist. I'm not a financial analyst, and I probably wouldn't have done it. But to your point, over the course of time, Bitcoin's resilience over these number of cycles has motivated me to dig in a little bit deeper about the value
So
proposition.
talk about that
offers.
resilience, because some people are looking at that 60,000 something to 30 something thousand that we're seeing right now, and saying, "But what are you talking about resilience? That was a 50% drop in a week." So I know what you're talking about, but explain what you mean by that.
Bitcoin, this is, most people would say this is kind of the fifth cycle. And, from peak to valley of each cycle, it's been commonly down 90%, 80%. And within those cycles, there's been extreme volatility. And I say, violent volatility. But if you zoom out, the overall trend for this whole sort of movement is positive and sustainably positive, in my opinion. It's basically doubled every year for a decade in price. And there's a number of reasons for that, but it's a very unique asset. It can't be manipulated. It's algorithmic. It's software. There's all kinds of sort of descriptors that you can spew out, and most people will parrot those back to you. But what I would say is that you need to sort of dig into each of those descriptors and understand why they are important to the asset, and what makes it different, and why you think that it has longevity moving forward. And that's what I've done.
So we've talked about, so specifically, obviously you have the price movement that is compelling over time. Philosophically, though, if something's changed for you, you've understood something that you didn't understand before, and I'm specifically talking about Bitcoin because, again, we'll get into this in a bit, but there's Bitcoin and then there's everything else, right? So philosophically, there is something that clicked for you as a non-tech guy, as a radiologist who's, going to work every day, doing your thing, and this is really valuable, I think. I mean, whether people are not kind of buy this, but tell us what the aha moment is. I mean, I know there's a lot to it in your book, but try to summarize it. Like, what went from, damn, I'm not, this is an asymmetric risk place. This is something where I'm going to put material amounts of my net worth into, because it's not just because of price movement. There's an underlying thesis that you have believed in, which a lot of people do believe in, including myself. I just, that's another issue altogether. But talk about that pivot, because this is really important. And perhaps, I know you've sent out a number of resources, maybe as part of our introductory email, with your permission, I maybe just send out some of those resources.
Sure. I mean, I think for me, part of it came to when I realized that the way that it's set up, the likelihood of it going to zero is very low, in my opinion. Okay. And so you chop off the tail risk, and the upside of it, in terms of its potential for adoption, is massive.
So explain why that you think right now because I agree with you, but why do you think Bitcoin going to zero is the chance of that is virtually zero?
I think because of its decentralized nature, because it is a protocol that is immutable, because it is international, and because of the number of people and entities that have already adopted it, and because of the overall market share that it has obtained so far, I think it has such a network effect advantage over any other potential competitor that it's kind of like, other examples of decentralized software where you just can't kill it. And so that to me is very, very compelling. And I think it's very unique in the way that it originated to that, right? So you have a designer who disappeared, and there's no centralized nature to that, to its control right now.
So I would just add to that too, Ian, that there's a couple things I think that are important. One is that, like you talked about it, the size of it is at sort of a critical point right now at a $1 trillion market cap, and with mass amounts of adoption. through institutional players. And you've got literally, I think it was Penn Mutual or something like that, about like $200 million of Bitcoin.
Yeah.
Something like that. I probably am off by a company or 50 million.
I think it's Mass Mutual, but
Mass Mutual.
Well, but to your point, the compelling case for me is that right now it's basically a $1 trillion asset. And
right.
In simple terms, if you just compare Bitcoin as a digital asset reserve versus gold, which is an analog asset reserve, and compare the market shares of the two, it's still 10-1. And so just on that trajectory, you still have minimum, in my opinion, 10x potential.
Agreed. But then the other thing about the zero part is really important to understand. It was really important to process, because if you have ruled out zero, there's only one way for this to go.
Right.
And that's $1 million Bitcoin someday. I mean, that there's only one way to go. So go. Yeah. I'm sorry to interrupt.
Yeah, no. So if you just kind of go across the categories of what the world sort of agrees upon are descriptors of the value proposition for a reserve asset, gold and Bitcoin, and you compare the two. Is it scarce? Is it storable? Is it decentralized? Is it durable? Is it fungible? Verifiable? Those kind of attributes. And Bitcoin outperforms gold in so many of those. And if you take that within the context of, basically, most things are becoming digitized in some way. The rate of change is never, in the future, will never be as slow as it is right now. Things are just rapidly evolving. And you just sort of, zoom out on that potential 10x, at least equaling the market share of gold is very, very attainable. Now, beyond that, there's estimated $400 trillion of assets worldwide, and many of those are just seeking a reserve. You're just trying to store your value, and so not that Bitcoin is going to take over $400 trillion.
Sure,
but there's upside potential beyond just that 10x. That's compelling. So as you said, if you chop off the tail and you say that you're convicted that it's not going to go to zero, and you feel like the trajectory and the momentum is carrying it towards that replacement of gold as a reserve asset, that's the broad thesis. Now there's a lot of nuance beyond that, but
so people will say, well, gosh, how can you have a reserve with volatility like this?
I think volatility is part of the transition from nothing to a worldwide reserve. You have to have volatility to make that transition. And, cognitively, if you can accept that, and if you know that before you deploy, then it's much easier to tolerate. But if you don't educate yourself and don't understand what you're doing and why you're doing it, and you're just parroting and FOMOing behind everybody else, then you will be watching that and you'll be getting sick to your stomach and you'll be selling emotionally, and you won't stick to what the value proposition is, which is a long-term play. And, people ask me, how can you handle this volatility? It's easy. You don't look at it, and you basically deploy, and at a very minimum, it's a 4-year cycle. Like you just need to stick it out, make it similar to a real estate play, and say, I'm in for a minimum of 4 years. But I think over the course of that 4 years, your conviction that this has more potential will become stronger and stronger, and that 4-year timeline will extend.
Yeah, I tend to agree with that. One of the things I think that's going on, this is apropos that we're actually having this conversation in the middle of a meltdown. And I don't know, I don't know if this is the end of the bull or not. It may or may not be. But when you switch your paradigm to this is not just playing for a few bucks now, you actually look at these massive pullbacks as a real opportunity. And not worry about what the Bitcoin that you have is worth today, but the fact that you can accumulate it. I mean, one of the other things I'll point out is I think that we're also going to see in the next, with continued volatility, you're also going to see a huge wealth transfer too, because one of the great things I think about Bitcoin wealth right now is, so much of it disproportionately compared to other commodities is in the hands of the retail investor. But the smart money is not going to be scared off by the volatility short term. They've done their research on this. And I think in situations like this, where you have these big, reductions of 50% at a time, the smart money is going in and sweeping in what the retail investors are too scared about now.
Yeah.
And that's something to think about. So you don't go and sell, and might consider buying. Although I'm actually holding off because I think we're in capitulation right now, and I think there's some downside to be had now. But the one other thing I'll add is the volatility is a product also of the fact that it is only a $1 trillion market cap. Now, if this goes to $1 trillion, if this goes to 10 trillion like gold, or 20 trillion or whatever, that volatility essentially goes away. But in many ways, at that point, the opportunity goes away too.
Agreed. I mean, to your point, I think this is a unique asset class, and frankly, it's one of the few in probably modern history where the average Joe basically has a shot at accessing it before the big money. And so, as you look at the various cycles and the adoption that has occurred so far, it's been sort of early techies, and then there's been, some maybe, group of whatever freedom libertarian guys, and then you kind of get the early adopter retail investors, then you get the hedge funds coming in, and now you're getting entities and companies taking it on their balance sheet, and then you're getting insurance companies, and pretty soon you may even get sovereign nations as it sort of goes across. But it only takes one or two in each of those categories to stimulate others in those categories to pay attention. And, then they have either FOMO or competitive motivations to learn about it and potentially put it on their balance sheet. So all of that is, in my opinion, is part of the adoption process. And it's the price of being early with the potential, as you mentioned, of exponential returns over time.
So one of the other things that we talked about yesterday, I think is something to think about on a practical level for people who in our space, figuring out how to allocate. Because I told you, your question was a good one. Why are you not ultimately buying more Bitcoin? Because I'm not buying a lot of Bitcoin, especially now. I'm not buying a lot of Bitcoin at this price, but I'm looking at, I have some alt purchases that I've made recently. But one of the major reasons for me has been the tax issue, which is I am massively incentivized to invest in real estate. Literally every time I invest, that almost that full amount of money ends up being a deduction off my federal return because of my real estate professional status and because of bonus depreciation. So now, granted, not everybody has that level of impact from investing in real estate, but generally that is one of the benefits, and a lot of people are looking for. So how have you navigated that situation? Just as not as advice, but as a potential template for other investors.
Yeah, it's a great question. I mean, there are no direct tax benefits towards investing in this, and in fact, it's pretty substantial tax consequences. For every exchange between coins and for every sale, it creates a reportable and taxable event. But there's a couple of ways around that, and one of those basically goes to one of my principles, which is to have as much optionality as I can for my portfolio, and some of that is that I have optionality within qualified accounts, and so if you want to mitigate the tax consequences, those accounts or those sort of vehicles are very basically optimized in this situation, assuming that you acknowledge that you're marrying the government, and the government can, screw you over at any time. But they
love Bitcoin, by the way. So.
Yeah, right. So that's one way. But then there's another thesis that I was trying to poke you a little bit about, which is, even with the tax benefits of real estate, and even with the sort of outpaced returns that you can get relative to, say a 60-40 split stocks bonds, whatever your metric is, you may come out better by, sort of increasing your allocation towards this if you're convicted, if you believe in it, and capturing the exponential upside, not necessarily selling it at any point, but being able to borrow against it, similar to some other vehicles you can use. And so you never sell it. You could borrow against it if you wanted to, which will presumably be tax advantaged in the future. And then you could potentially, continue to hold that and sort of ballast out the remainder of your portfolio and spend down some of your fiat. That's just another strategy that I've been sort of, knocking around as well.
I will say that if I had qualified funds, which I don't have any qualified funds right now, but they would all be they'd all be in cryptocurrency.
Mm-hmm.
I mean, this is in many ways, to me, in my opinion, a perfect use. People have been complaining about, what do I do with these qualified funds? And I can't get all the tax. But guess what? Here you go. This is a perfect thing.
It is.
To jam.
And it's been, and to that point, it's been a challenge to be able to deploy into it, right? So these institutions, because of their charters and their regulations and their entity documents and so forth, haven't had access. So they haven't been able to offer to their clients. As their clients have been clamoring for crypto access and haven't been able to get it. But those barriers are starting to melt. There's a few that you can do right now. There's inevitably going to be more. And with that, if you think about that, if people, sort of wake up and say, hey, I have this tax advantaged vehicle and I'm convicted in this arena, I'm going to put some money there. So what is that going to do to the network effect of Bitcoin? I don't know. It seems to support it.
So obviously you're kind of you've sort of drank the Kool-Aid in the Bitcoin space. I'm saying that as a joke, but I mean it. I feel I'm completely on board with your sentiments on this. I've just haven't been able to figure out how to navigate putting more in, given my lack of interest in paying the government.
Right.
So let's shift a little bit because we've really been talking about Bitcoin per se. How do you look at everything else, or do you? I mean, are you even interested in everything else outside of Bitcoin? Are you a Bitcoin maximalist?
I'm not a maximalist. I have admittedly dedicated the majority of my time and attention towards really understanding Bitcoin. And I'm glad that I have, because I am convicted in that area. And for all of the sort of descriptors that we've discussed, I think that it's a great asset. Now, Bitcoin gets mixed in with all of the other coins and cryptocurrencies. And I think while they do have some similar properties that are, in my opinion, not even close to being the same. And most of these other projects are not necessarily decentralized. They are centralized. And the way that I view them is that they are almost an egalitarian way to angel invest. Without needing accredited investor status, you can take positions in projects that could potentially change the world, really. If you see some parallels between this sort of digital movement and the, for instance, the evolution of the internet and how that evolved. A lot of these projects may be flyers that really do change the world, and you can access them at very responsible prices right now, but they're not all the same. And you really owe it to yourself to dig into those projects and understand them before you invest. And so from my perspective, I have not done that work yet. And I've thrown a few $100 here and there just to, say I did, but I'm nowhere near as convicted, nor do I have even remotely similar amount of capital in any of those.
The analogy I kind of use is, I think there's Bitcoin and then there's everything else. Mm-hmm. And that doesn't make everything else less valuable. It makes it completely different. I think we used to put Bitcoin in the category along with other asymmetric risk type vehicles. I think what you and I are both saying is that we believe that is no longer as much of an asymmetric risk play as something that I think if you believe and if it continues along its trajectory, it becomes a very attractive high percentage bet over the next several years. So I take Bitcoin out of that. Yes. And then there's everything else. And then everything else ultimately, runs in just a few different categories. One is it's some kind of additional currency play like Litecoin or some of the, the secret coins, the ones that, are hard to figure out who has. I really don't think those really have legs over the long period. I mean, who are you going to, I mean, basically there's just creating, unless you're truly a money launderer, or you're trying to do something illegal. I mean, what's the point, right? So, so I really don't think that those have a lot of legs. I'm not investing in a lot of those. There is the complete BS stuff, and there is a lot of that. There's a lot of it. And, there's like, for example, Dogecoin, which stopped any sort of development over 3 years ago. Now, why is Elon Musk pumping it? Because he thinks this is a big freaking joke. That's why. Because he's the puppet master, and he's just watching all these idiots move on everything he says. And he's like, yeah, Doge is awesome, and he amuses himself by seeing people, go crazy in that. So there is a lot of this BS stuff that has nothing behind it. Then the third category, and the one I'm actually very interested in, is technology that could fundamentally change the world, that essentially I'm betting on in no different terms than early phase tech startup companies that I believe in. And obviously I've made no mystery of my interest in Hedera. HBAR is the native coin there. And they, and I look at what they've done, they're already, it's massive utility. They're, the protocol is being used to track the International Space Station. They just released a paper on the FedCoin concept. I mean, there's a tremendous amount of stuff that's utility. It's a startup, and it's real. It's a real team. It's doing things. It has plans, that kind of thing. There's not that many of those. But I think if you find those types of projects, then you're really working almost like as a little mini venture capital person that also has the ability to keep liquidity, and you're not holding something for 10 years. So I think that those are the asymmetric risk plays that I personally find very, very interesting, but I don't see them in any way, shape, or form as the same as Bitcoin.
Agreed. Yeah, I agreed. I mean, I think they're curious, and I think it's a good exercise to know about them to a certain extent, and to find something that might interest you. But they are in a completely separate category, and I think your analogy to early tech startup is appropriate, with the advantage of you can have some liquidity associated with it. And most cases with early tech startups, you're locking in your money for a long time, and you may or may not ever see it again. So to that effect, it might be a little bit better, but extremely risky. If you look at the sort of historical, at least over the last decade, the altcoins and which ones have made it through one cycle, if not two cycles, it's exceedingly rare that they do. Right. Now, presumably that's all going to change as you mentioned, there is utility and adoption in that utility, and they gain traction in that utility. Then presumably that those trends will break, and you will have some of those that continue to grow and to provide value. But it's it's a needle in a needle stack.
Yeah, I think that's right. But I think even if you go back to 2017, virtually no projects were doing anything.
No, it's all white papers.
Yeah.
It's all, we're going to do this. We think we should do this, and now there's actually.
Yeah. So I do think there will be a little bit of focus and change in going from ideas to, focusing and investing in utility and what people are actually doing. It sort of becomes more of a real market. And that's interesting, because what I'll be curious to see it happens in those situations is, right now, prices live and die with Bitcoin, right? Mm-hmm. You go on a Bitcoin bull run, the alts follow. And the Bitcoin crashes, well, all the alts are crashing. And the question is, at some point, it would seem to me that if you're starting to look at these projects as utility, they should become independent of Bitcoin to a certain degree.
Yeah. I don't have any argument against the thesis that they will gain traction. The thing that I've been trying to contemplate, and this applies to Bitcoin to a certain extent, is that I feel like we're right in that suspicion, but we may be right at the wrong time.
Right.
It may take a lot longer. Yeah, it may take a lot longer than we actually think or hope.
Right.
And I haven't reconciled that yet.
So let's see. Just looking, since this is turned into Ask Ian show instead of Ask Buck. I have one question here on stablecoins. I'll just read it out from Aaron Finley. He says, "Hi Buck, longtime listener. Greatly appreciate your perspectives. Here is a question I have. Stablecoins appear to be a great place to put idle cash, with returns ranging as high as 12% or even more in a lot of cases. Trading in stablecoins is usually free of fees and commissions, and these are usually easily liquidated. As this is a pretty new space with developing oversight and transparency, how does one go about assessing the risk of these investments? Clearly, diversification is a great way to minimize risk by leveraging a variety of coins and platforms. Are there other risk mitigation practices that one could use?" Yeah, I mean, I have to tell you, most of these platforms I'm very, very wary of. The ones especially, frank and ironically, that are decentralized, because I think that in not having centralization and some regulation, I think you are, in my opinion, I think you run a lot greater risk than you do with, frankly, what I've been using for interest bearing on my Bitcoin and Ethereum has been BlockFi. BlockFi is it's a American company with American regulations behind it, American investment. We've had the founder on multiple times early on when they were a small company, and I use them, but you have to wonder too, like, how are you getting 12% or how are you getting 15% or 20%? And if you start asking these questions in the decentralized space, I think it might be a pretty risky thing to do. Ian, what do you think?
Yeah, that's an area that I haven't done enough investigation on in terms of the lending environment. I do know that the opportunity to quote unquote stake your coins provides additional liquidity for people who are trading with leverage, and for better or for worse, some of that trading is what triggers a lot of the near-term volatility. But in terms of the risk associated with it, the term "not your keys, not your coin," that's something that Maximus will say. Like, there's some third-party risks of the platform. There's the counterparty risks. There is sort of downward pressure on the interest rate risks. There's tax consequences that need to be considered. But all in all, it's not a bad thing to necessarily do with a portion of your Bitcoin portfolio or altcoin portfolio to stake and get some yield on it. I can't say conceptually it's bad. I just I'm a little hesitant to sort of endorse many of these platforms currently.
Another question related to cryptocurrency from Mark, who says, what do you think the net effect of negative government impact? But basically what it comes down to is saying is, what do you think that the negative view from the U.S. government and Janet Yellen on Bitcoin will do to it? Do you think it will destroy it? Well, I think both Ian and I would agree that governments, and this is one of the advantages of Bitcoin, is that governments can't destroy Bitcoin. They just can't. One of the reasons that Janet Yellen really hates Bitcoin is the same reason that really governments generally for a long time really were trying to dissociate from gold altogether too, right? It's not something that you could control. And if it becomes part of, the monetary system, it's part of it that you can't necessarily control, can't tax. It creates all sorts of problems. And, one of the other things with Bitcoin that the parallel here is, by the way, is gold in the early 20th century. And then what happened, obviously, in the Roosevelt administration, ultimately, gold, it became illegal to own gold, and they collected all that gold, set a price, and created Fort Knox. So that's what government does when it feels like it's not in control of the economy, and there's commodities that are creating roadblocks for it. So I'm not convinced that, although I'm convinced that she can't confiscate it, because you can't confiscate it. You could potentially penalize people for in various ways through taxation. those things are also tough legislative issues to get through as well. So I do think that in the next decade or so, as there's this transition, as Bitcoin goes from a $1 trillion market cap to 10, well, it still seems like that the serpent can still be quashed, that there probably will be some punitive tax legislation, at least that there's attempts to go through. I think over time it becomes less of an issue as it gets absorbed into the system, because I think the ironic part about Bitcoin is that what is going to help it survive is the very thing that it was created to get away from, which is government and Wall Street. So I think as it gets absorbed into Wall Street, gets absorbed into pensions, into these, mega funds, it will become something that has its own political strength. And at that point, it has protections from the very thing that it was created to avoid.
Yeah, you're right. I mean, it was created to get away from a centralized medium of exchange, which is what sovereign national currencies are. So it's decentralized in that way, and it's not confiscatable, as you mentioned. And it would be because of its network effect, because of its multinational adoption. You can't kill it, but you can regulate it, and you can tax it. And so, if you project that out, like there could be a very, very challenging time, and how long that lasts, who knows? But it could be very uncomfortable to hold Bitcoin. I mean, that's one of the risks. It could be, disadvantageous, and they could make it so uncomfortable that you don't want to hold it, particularly in the U.S. I don't think it'll kill it, but what it may induce is sort of multinational competition. And at some point, if you have a net worth that justifies it, you may vote with your feet, and you may just go somewhere where it's more embraced. I
mean you're going to leave Wisconsin, Ian?
No, I'm not in that category, but think of the people that were early adopters who hold thousands and thousands of Bitcoin.
They all live in Puerto Rico.
You're right. Already. Yeah, you're right. And those whale moves, those are in tax advantaged environments. I mean, nobody would kind of give away unnecessarily half of that just for a sale. So they're smart, but they're few. And once more and more people have a stake in it, more and more people have holdings in it, then that creates political pressures and legislative change and so forth. So
you really are playing the long game with Bitcoin, and I think that's the only way to look at it.
Yep,
you really
absolutely.
do. I think if you're looking at it as a trader or somebody who's going to get in and try to make money and get out, don't do it. It's just going to be, I mean, if you can get yourself in a mindset with cryptocurrency in general, I feel like, I'm really limiting my investments to projects I truly believe in. Every time they fall, I'm broke right now because I'm buying a house, but I look at them as opportunities to add on to things that I have a lot of conviction in at a price that I would maybe not thought would have come back anytime soon. And so I think if you can get into that mindset, and again, we in the real estate world, we're used to holding things for 5 years, and we don't look at what the value is on a year to year basis. We know that at some point we have an exit years down the road. If you do that kind of thing and have some firm beliefs in the companies that you're investing in or this entire Bitcoin concept, then I think you're going to do yourself a great service, because I think if you're looking at these, listen, this whole space, this digital currency space and distributed ledger technology is not going away. Just not. It is the future, right? So don't think of it as a flash in the pan.
Yeah, absolutely. Long game, right? So very simply, buy, perhaps even dollar cost average in, hold, buy on the dips.
Yep.
Don't use leverage.
Yep.
And repeat.
Right. Great. Well, Ian, we are obviously one last question for you. So right now, what are we at now? Bitcoin, is it under 40?
Yeah, it's been bouncing.
And I'll tell you what, it's crazy to look at it and say, well, like Bitcoin's under 40, it's cheap. You know?
But it's a land grab. I mean, it's a scarce digital asset. They're not making any more.
Yep.
And so, people right now, we're looking back at, a year ago when it was 10 and wishing that they were in a 10. And back then 10 was like, who would pay 10,000 for, a Bitcoin? And then before that, it was who would pay $100 for a Bitcoin.
Mm-hmm.
Pretty soon it's going to be, I wish I bought in at 150K,
Right.
So it's a land grab in a scarce digital asset.
Yep. So right now you say your personal mentality is to double down right now as Bitcoin is at 39,000.
So I've removed my head from this. I just dollar cost average.
Yeah.
And so like if you want to take that another level, you could say that the all-time high was 65, and now it's down almost 50% from that. So maybe you put a little bit in on that, but you don't even need to get that fancy. You just pick a number that you're comfortable, and there are opportunities, there are on-ramps now where you can dollar cost average daily if you want to. And remember that these digital assets are not 9 to 5 Monday through Friday. They're 24/7, 365. So you can daily or twice daily if you wanted to dollar cost average, just a small amount. It's pretty simple.
All right. Well, obviously, Ian, this was actually such a incredibly popular show, like discussion we had on Wealth Formula Network. We had to turn this into the show. Again, if you like these kinds of discussions, consider joining Wealth Formula Network. Go to wealthformularoadmap.com. You'll see this whole cheesy page that was built for me, this sales page for the course and all that. But really, it's the course. It's a good course. It sets the foundations. Then we get into the conversations like this on a biweekly basis. I mean, this is fundamentally the kind of thing, this is what we talk about, these kinds of things at this level. And, Ian is there most of the time. Sometimes I can see him in I'm just kidding, in the background with, just kidding. I won't even say it. Anyway, that's it for me this week, Ian. Thanks for coming on the show, and we'll be right back after these messages. Welcome back to the show, everybody. Hopefully you enjoyed it, and thanks to Ian for coming on. I just want to remind you again, if these types of conversations are of interest to you, certainly consider joining a Wealth Formula Network. Go to wealthformularoadmap.com. Ignore the cheesy sales page about the course. It's really, you sign up for the course. The course is great. And then there's these biweekly Zoom video calls and Facebook page, which I think, as you can tell, this is the level of conversation that goes on there all the time. It is really good. It's for the person who wants to talk about this stuff, but your spouse, your family, your neighbors don't want to talk to you about it. But it's a great place to learn and grow. And love to have you join us. So check it out, wealthformularoadmap.com. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.